Well, folks, it's been another month. It's time for another market update, and welcome back to our market update for the month of April 2026 for Sarnia-Lambton. For those that don't know me, I'm Sean Ryan from the Blue Coast team at Coldwell Banker Southwest Realty, and I've been a realtor here in Sarnia-Lambton for about 20 years and bringing you these market updates for the last 7 years, probably quite consistently as well. So we're going to cover April 2026, and there's lots of interesting information that we're seeing in the economy right now and in the real estate market. We're going to try to unpack as much as we can today for you. So the big thing first is sales dropped 15% year over year. Buyers kind of pumped the brakes a little bit in the month of April. But here's the thing, the reason they pumped the brakes is important. It's not what you may think. And then the market structure is actually holding up better than the sales numbers suggest. And also the Bank of Canada, well, they held rates April 29th, and Korea just downgraded its national forecast. So there's a lot to unpack during this video. So first, let's look at sales activity. So we saw 144 sales in April 2026, and that's down about 15% from April 2025, 171 sales, and a meaningful pullback, really, when you think about it. And this comes right after the March was a flat year over year, quite a bit. And we talked about that in the last video quite a bit. And so why the reversal, you're probably wondering. And the answer is, part of it is at least fixed rate mortgages jumped in mid-March, actually, where rates stayed the same for the Bank of Canada. We saw the banks start to raise those fixed rate mortgages. So fixed rate mortgages, sorry, words are hard today, climbed 25 to 40 basis points in the second half of March from 3.79 to 4.1, almost just under a little bit. So that's a big difference for a lot of buyers. Buyers who were about to pull the trigger maybe kind of paused a little bit. Affordability might have pulled back a little bit for some of them as well. And it really showed up in the April closings that we saw. And this timing of affordability story is not a fundamental market breakdown by any means. And we're going to get into that a little bit later what this means. Single family had 124 sales, so down about 23% from April 2025 with 161 sales. And that's the sharpest drop we've seen in a while. Year to date, 415 sales, and that's down 11.9% from the same period last time at 471%. And for context, 144 sales in April is still ahead of 2023 and 2022, the 138, and the COVID beginnings of 2020 with only 81 sales going back to 2020. So things are still looking okay, but not the direction that we're really kind of hoping. Dollar volume and pricing, that's the next thing we're going to talk about. So dollar volume, $76.3 million, and that's down 18% from April 2025, which was 94 million. So a big difference there. Average price, 530,000, down 3.8% from April 2025, where it was at 551,000. Median price, 459,000, down just over 7% from April 2025. And you're like, Sean, there's a lot of downs here. What is the positive news? But year-to-date average was 500,000, down 4.4%. But the single-family average tells a different story that we're seeing right now. So single-family average is around 567,000. It's actually up about 1.5% year over year. And that segment is holding value. The overall average is being dragged by other property types, really. And the MLS, we look at the home price index. It's a new metric that Korea and a lot of the real estate boards came out with to give us really true data on things. And the reason why is the average house price is really being dragged down by a lot of the new home construction and the higher price listings that weren't selling as much. So this really gives us true data, and I think it's a great new benchmark that they're doing. So the HPI is the most reliable price measure out there right now. It tracks apple to apples across time. So the composite benchmark 502,900 is actually up 3.1% from just a month ago. Single family benchmark 5029 is also up 3.1% month over month. One story bungalows 546, two stories 449,000. So the HPI is really moving up even as average prices move down. And this tells us that the mix of homes sold changed, not necessarily the value of the homes. And that's the big thing people have to realize is it's not necessarily just the values of homes that have gone down in some areas. It's really the mix of homes that has gone down and changed. So it really has been affecting. So I really appreciate this new HPI benchmark that they put out, and that's the home price index. I know I'm going to be using a lot more of it in these market updates as well. So let's look at listing inventory. 309 new listings in April, down 5.2% from April 2025. Listing activity is cooling slightly after March's surge. We're seeing less listings come on the market. Active listings, 565 at month end, and that's down about 8% from April 2025, so 614. And for the second straight month, active inventory is below last year's level. So that could be good or bad depending on how all of that shakes out. And the peak was 614, April 2025. Like I said, it's 8% lower at 565. So inventory is clearing, but just slowly, which isn't a bad thing for the market. Months of inventory, 3.9 months of inventory. And again, that depends on the price bracket. That 3.9 months is just the average. As we go into some other price brackets, especially the lower ones, you're like 2.5 months. As you get into the higher ones, it could be like 7 months. So just keep that in mind as we're talking about that. So it's up from 3.6 of April 2025. So not much up. And sales fell faster than listings this month, but still below 4%. So really good. Inches towards sellers market territory under 4. I don't think we're there yet. We need to get closer to that 6 months, but there is some price brackets where we are in definitely a buyer's market. It's usually in the higher end stuff and new home construction resale, actually, that's less than 5 years old. And for context, we were at 4.9 months last March, or 4.4 in March 2026. The trend is tightening good, so it's going in the right direction. And sales to new listing ratio is 46%, down from 52% last April. And it's below the market threshold of 46% of balance, so which is really good. And again, that sale to list price ratio depends on the price category you're in quite a bit, actually. So just keep that in mind when you're looking at that. So days on market and sale to list ratio. So median days on the market, 22, unchanged from April 2025. Home selling at the same speed as last year, despite lower sales volume. And stable days on market really tells you well-priced homes are still moving. And sales to list ratio of 97%, essentially flat versus last year at 97 as well. Buyers getting 2.4% off the asking price. Very stable, no sign of sellers, just going down and buyers overpaying. So let's look at most popular home styles now as well. And this is from the MLS detailed stats. So we got bungalows in first place, 55 sales, average price $593,000. It's always dominant in Sarnia. Bungalows are always the go-to. 2 stories are next at 25 sales, average $618. A little bit different from some of the other prices we were talking about earlier. 1.5 stories, 14 sales, average $478,000. Back splits 4 level, 7 sales, average price $463,357. Raised ranches, 7 sales, average $608, and bungalows and raised ranches commanding the strongest value, but per category. And then 2 stories averaging $619K, strong premium for newer, larger builds in that as well. And then let's look at the breakdowns from different areas. We got Sarnia North, 71, 520,000, down from 86 sales last April, but still kind of holding strong. Point Edward, Lakeshore area, 19 sales, 853,000 was the price point there, and by far the highest average in the region. Sarnia South, 13 sales, averaging 550. Like, great for Sarnia South though. And Sarnia East, 14 sales an average with 422,000. By far the most affordable area. And Lambton area, 5 sales, average price $369. So those outlying areas showing softer pricing overall. And Sarnia-Lambton core, 125 sales at 557,000. So price distribution, though, really the most activity was in that 400 to 600K, 58 sales combined. And then the 400 to 500, 36 sales. 500 to 616 to break those two down. 300 to 422 sales, so still from pretty affordable stuff you can find in Sarnia-Lambton. And 600 to 714 sales. And the upper end active, 9 sales over 700K, including 6 sales, 1 million plus. So good to see that stuff move. And 0 sales under 200K. You need DeLorean, you need a time machine for that for the most part. The only thing you're seeing under 200K is the odd trailer or the odd vacant lot somewhere. We can find that. It's pretty much non-existent like it used to be. I remember years ago when we were doing these, like 7 years ago, that was a very active price range. So a lot has changed. So let's look into some national news right now and policy and things that may be affecting our housing market here at home. So Bank of Canada, they held their rate at 2.25% April 2020, April 29th, 2026. Not surprised at all. And that is the fourth consecutive hold rate on change since October of 2025. Prime rate stays at 4.45. Not surprised. The governor of Bank of Canada, three key messages. Canada is by global events, but the economy is growing. So Canada is really, it's out there, things are moving, which is great. Higher energy prices was the big thing. Middle East, Iran are pushing inflation towards 3% in April. That has a big effect on people's mindset on buying and stability and stuff like that. And then monetary policy is focused on making sure the energy prices doesn't become persistent inflation, but we'll see what happens there. GDP growth forecast at 1.2% for 6%, modest but positive. And unemployment still holding 6.5, 7 range. It's a very soft labor market right now. And that affects Sarnia-Lambton because we are very tied with labor in Sarnia-Lambton with the petrochemical industry and everything we have going on here. Also, construction market, but hopefully we'll see that pick up, which I think we have been now. Next Bank of Canada decision is June 10th, probably going to stay the same. The money markets are not expecting a change in the rate in June, but some are pricing in a possible 25 basis point hike later in 2026 if inflation doesn't ease. So that will be interesting if that happens right there. And then kind of a bit more on the fixed mortgage rates, the real story for April on that is while the Bank of Canada rate is on change, 5-year fixed rates jumped 25 to 40 basis points in the second half of March. The best nationally advertised 5-year insured fix now around 4.04 was 4.79 in early March, so that's a change. Variable still 3.35, meaningful lower than fixed, and this is direct cause of April's sales slowdown. Buyers are waiting to see if fixed rates come back down a little bit. There is some people that worry about that. And CRE economist Sean Cathcart, the timing of higher mortgage rates could keep would-be buyers away at most active time of the year, which is not great. This is April. This is the spring market. It's coming in starting May. So April, May, June as they wait for rates to come down. So I think a lot of people still on the sidelines and they try to time the market, which is horrible advice because no one can really time the market. And the takeaway, rate stabilization or dip, pent-up demand could re-enter quickly, hopefully. So the Korea actually had a downgrade in its 2026 forecast as of April 16th. National sales forecast revised from 474,972. It was 949, so that's now just a 1% growth over 2025. National average price still expected to rise by about 1.5%. to 688 in 2026. Ontario and BC still expected to lead any recovery, but the pace is slower, just a little bit slower than expected. Obviously, the oil stuff that's going on in the Middle East, it's raising things up. Fixed rates could jump, buyers could pause. And Korea, again, the big thing is the oil shocks is short-lived. These forecasts could be revised back up in the next Korea quarterly forecast in July 15, 2026. So there's a lot of unknowns out there. There's also a couple big things too that which affects Sarnia is, we got the CUSMA trade review coming up in July 2026. This is a big thing for a lot of people, and I think a lot of confidence comes into the market if this goes well and things are moving forward. I think a lot of people kind of on edge right now, wondering what the world's going to do and what we're going to see on that. So I think if CUSMA goes well, it's also going to add some more confidence in the market, which is great. HST. There is the HST rebate reminder still active. Ontario HST rebate on new builds up to $130K in savings. Eligible from April 1st, to March 31st, 2027. So that's like up to $130K. That's a big deal. That's a lot of money off of a home. And there were 2 months into that 1-year window. Anyone considering new construction still has time, but the clock is ticking. So you just have to have the agreement signed, is my understanding. you don't have to close it in this year. So you could close it in a year and a half from now. So that's really good to know. And so let's just wrap up really quick. We went over a lot of stuff here. April sales dropped was real, but the cause matters. Rising fixed rates, spooked buyers, mid markets, and that's really a fixable problem that we could see adjust in the year. The underlying fundamentals are holding. Inventory is below last year. Days on market's changed. The HPI benchmark up 3.1% in 1 month. Single family average prices up year over date. If fixed rates stabilize or the Bank of Canada cuts its second half of 2026, pent-up demand could comes off the sidelines fast, which is good. For buyers right now, it's an actual window, less competition. There would be if everyone came rushing back. For sellers, the market is very sensitive to your pricing more than ever, with buyers being cautious, carrying lots of costs, doing their research. So the market is very sensitive to overpriced listings right now. And the big picture is Sarnia-Lambton's not in crisis. I think it's in a bit of a pause. It's in a bit of a holding pattern. The drivers that will bring buyers back is rate stability. We got Kuzma. We got oil prices are all possible in the second half of 2026. And then June 10th, stay tuned for the Bank of Canada announcement. I predict it's going to stay the same. And I think we may see a slight rate increase later in the year. So thanks for watching, everyone. Welcome home to the Blue Coast, and we'll catch you next time.